Good morning, this is Connor from 0DTE Traders here to present our market minute for November 1st, 2023. It is Fed Day, so we have the Fed rate announcement at 2 o'clock, the Fed presser that follows at 2:30. As of now, the markets are positive, but it isn't really going to matter a whole lot because Powell is likely to spark that next directional move, whether it's to the upside or to the downside. As far as resistance levels goes, we have 42.25 on the upside. This is also our flip, so a move above flows will become supportive once again. Above that, 42.45, 42.50 is the next resistance level. In addition, we have the implied high around this handle as well at 42.48. On the downside, the first support zone sits at 41.80, 41.75, followed by 41.50, which held in yesterday's session. And then we have the implied low at 41.38. And the next support zone at around 41.30, 41.20. We got a gap zone, and well, this is a zone that was in play last week. And then, of course, put wall on the downside, 4100 is our lower bound until that shifts lower. Now, turning to our market report, we're obviously talking about the FOMC today at 2 o'clock. And according to the CME FedWatch tool, there is a 97% probability the Fed will not hike rates. So unless the Fed surprises with a rate hike or a rate cut, the market outcome is heavily dependent on Powell's speech. If Powell's neutral, the FOMC may be a non-event. But if he is hawkish or dovish, markets will move accordingly. So we're not only looking at SPX, we're also going to keep a close eye on the VIX, as well as yields, how they respond to the rate announcement and Powell's comments. Participants are clearly expecting higher volatility today, with options pricing in a 1.3% move, and the 0DTE at the money straddle, which was 41.80 at the time of writing this, was trading for about $36. So that reflects a 0.71% move. So ask yourself, do you want to buy it? Do you want to sell it? Maybe that'll give you some indication if you want to be short vol or long vol going into this event. Now, historically, the FOMC days have been mixed, obviously. So when inflation was a little bit higher, we clearly saw some more volatility and a lot of shocks to the upside. But since then, FOMC days have been primarily red, and we've definitely had a couple non-events in here. Now, the last FOMC on September 20th, the market did decline almost 1%, 0.94%. So big question mark here today. Now, something we're really stressing to our members is that there is really no directional edge trading the FOMC or positioning prior to the FOMC, which makes it quite of a challenge. And many professional traders, opt out trading these days, or at least reduce their risk exposure. So if you don't have much edge in the market, that is, basically just gambling. And we're not gamblers, we're traders. We take a statistical approach. So just be a little bit cautious. You don't want to be going into large drawdowns, trying to navigate what's going to likely be whipsaw, choppy type action. Now, of course, there is potential for some nice volatility, which does present opportunities as traders. So something that I like to do is implement single options, trading in and around the FOMC. This provides a very low risk, high reward approach. And what I like to do is play the counter to the first move. So more often than not, the first move is the wrong move. So if the market sells off, perhaps that's a good call buying opportunity. If the market rips higher, perhaps a good put buying opportunity. Every situation is different. This is just a pattern that we recognize. So we'll see if it does present an attractive opportunity. But I suspect there to be some good swings and some nice opportunities for single options. Now, if you're implementing butterflies around this event, I do recommend using pending orders, to get in, to get out of trades, because that bid-ask spread is going to widen significantly. So market makers, to compensate for the volatility risk, is going to widen that spread, which could make it a challenge to manage the position. But if you use pending orders, the market will take you in, the market will take you out, and you'll generally get much favorable fills. Now, before the FOMC meeting, this is something that we stress every FOMC, that options do not behave in the same way. So they hold their premium as they're pricing in the high volatility event, which is, at 2 o'clock. So just be a little bit cautious because options are not going to behave in their usual manner. We were recommending for our ORB traders today, those that like the opening range breakout, to maybe opt for an iron condor right at the open, far out of the money, and you can play that theta decay on both sides. As far as key levels go, we've already discussed that looking at the charts. Now, something we didn't mention, or I guess we mentioned briefly because we discussed the flip, we are in negative gamma. Now, we've seen substantial improvement over the past 2 trading sessions as puts have basically lost value, but we're still not out of the woods yet. So the market remains susceptible to sharp downside shocks and spikes in volatility. Now, we've really been trading in this market environment since the beginning of August. So we've been in a negative gamma regime. Now, clearly we're seeing that reduction in negative gamma, but we're still not positive as of yet. All right, guys, that's all I have for you. If you're not a member and you're interested in learning more, you can visit our website at 0DTEtraders.com. Best of luck out there today.